Hi everyone, welcome to the Mighty Trades channel. My name is Johar. Welcome to another episode of the Global Market Outlook. So today's date is 19 June while I'm recording this, and let's try and understand what can happen in the market over the next week and the next couple of weeks. So starting with the first positive news for today is that crude oil last week saw a deep correction of approximately 5%. Sorry, let me correct that. Last week it saw a correction of 7%, and it sort of made a doji first and then a big red candle. So this is sort of like I think a sunset pattern or something like that it's called, or a shooting star if I'm not wrong, something similar to that. Wait a minute, let me just confirm that. Shooting star candlestick images. Yeah, so this is called a shooting star pattern. So I think on the basis of this pattern, if this candlestick pattern holds, we could probably see crude oil correct till $100 next week. And if that does happen, that's going to be a positive for the market. At least inflation might get in control in the month of June, and that could be a positive trigger next month. So on the basis of that, we might see some consolidation happen in the major indices globally as well. I don't think we will see a major pullback or something, but maybe some consolidation just because of the relief that crude oil is offering right now. Now let's take a couple of other global cues and see what's happening. So if we look at gold is still not making any big moves. Usually when there is a period of uncertainty in asset classes like equities, etc., gold usually makes a big move, but it's still not doing that. Not sure what's happening with gold, but as long as gold doesn't start making any big moves, the market is not going to panic too much. If we look at the US dollar, then the US dollar is again still at its all-time high levels right now. Sorry, not all-time high levels, but it's at a high of the last 10 years, which is not a good sign. That means a lot of emerging market currencies are falling. That's going to cause inflationary problems there. And obviously this is showing that money is going back to the US. So a lot of foreign players are pulling out their money. A lot of HNI clients are pulling out their money and putting it in the US dollar. If we look at the USD INR, then that also is not a really pretty picture. We are still trading at all-time high levels, and as we have discussed before, it looks like USD INR can go till 82 rupees. So that's also still not a very positive sign for the Indian markets. Now let's take a quick look at the European market and see what they did last week. So European markets saw a very sharp correction. Still, they haven't broken a major support level at 13,000. So this, what we are looking right now, is at the German index. So this is still not entered the bear territory per se. If we look at the UK market, this is still not given a closing below the major support zone of 7,000. Although it looks like it might do that in the next couple of weeks. But let's see what happens. Maybe it might consolidate in this zone for a couple of months. If you look at the French market, then the French market has, let me just move this over. Okay, so the French market is still also holding on to its previous level of 5897. Let's see if it continues to hold on to it over the next week or no. Or if it does break this, then that's not good news for people who are invested in France. They might see the index fall to 5500, 5400 levels. If you look at some major Asian markets, then the Turkish market is still staying at all-time high levels. The Taiwan market is still above the major support zone of 15600, but if this is broken, then there is a major support still at 15120 that is still holding on. Japanese market still consolidating in the same range in the last 3 months, so still holding on to a level above 24,500. If we look at the Hong Kong market is definitely in bear territory, but still consolidating in the last 3 months in the same range. If you look at the market in South Korea, this is broken a major level of 25.77, and it's made a new all-time low. Now right now it's trading at this major support zone of 2500. So let's see if it continues to hold on to this or no. If it breaks 2300 points, then that is not going to be good news in Korea as well. So overall, global markets are just at the cusp of breaking their major supports. So if there is no good news that comes out over the next couple of days, we could see still a major sell-off happening globally, which will obviously affect what happens in India as well. Now let's take a look at the root of the problem, which is the US market. And if we look at the S&P 500, then this has broken a major support zone of 3,900, which it was holding for the last 4 weeks. It gave a close below that, corrected by 5.79%, and it's also broken a major support of 3,700. So now the US market has entered, especially the broader market, which is the S&P 500, has entered the bear territory right now. And I think we are going to see it fall to 3,500 levels in the next couple of weeks for sure. There seems to be no good news coming around to save the US market right now. So definitely we are going to see this level in the next 1 or 2 weeks. If you look at Dow Jones, same story, broke the major resistance at 31,000. It's come back down to now 29,000 levels. 29,000 at the higher end, so it's still close to 30,000. But one good thing is that it's very close to its it's exactly at the pre-COVID high. So this was the high of February 2020 before the COVID crash came, and then after that a massive rally happened. Now it's at that level. Hopefully it holds on to this level, doesn't go below this. I see no reason why it should go below this. I don't think a recession will be as bad as the 6 months to 1 year of COVID lockdowns that we all went through. But let's see what happens. It's looking really bearish right now, Dow Jones. Hopefully it can hold on to this level and consolidate here for the next couple of months, and then we can resume an upward journey. If you look at Nasdaq is already broken the level of 12,270 2 weeks ago, and it's still not done correcting. It's corrected by almost 33% now. Major correction has already happened, and I think we are going to see the level of 10,800 also come in. And if that is broken, then Nasdaq will fall down to 9,800 levels, which was the pre-COVID high in Nasdaq. Now if you look at the VIX, the US VIX is very high, above 30, so it's going to be a very volatile week, definitely next week as well. And we are going to see huge swings happening in the markets, 500,000 points on a daily basis. So it's very difficult for options traders, futures traders, any kind of trader to trade safely or with any relevant strategy at this point. Now let's come and take a look at our own market and see what is happening. Let's start today with looking at the major sectors and seeing what's happening here. So Nifty Media looking weak, nothing great here. The Nifty Realty Index again looking weak. Nifty Metal looking weak, has broken the major support zone of 4,900. So now I think we can see Nifty Metal possibly correct up till its previous all-time high level of 4,250. If you look at the pharma index, this has also broken a major level at 12,355, which it was holding before. Now it looks like it might go down till maybe 11,200 levels. So pharma stocks are also looking weak. Psu Bank Index has finally broken, has again given a closing below this major support of 2,446. It had previously given a close here in the month of May, but then for 3 weeks it had a nice pullback, and now it's again gone down to this level. So PSU index also looking weak. I don't think buyers are going to come and save the PSU index this time. I think they'll let it fall down to probably 2,100 or even lower, where they can enter at better levels. If you look at the auto index, one of the stronger indices right now, still very far away from its support zone, still holding on to its close to all-time high levels. So auto index definitely a sector worth looking into right now. If you look at the private bank, let's not look at private bank. I think we'll look at the bank Nifty directly for that. Infra stocks looking weak, have given a closing at the lowest level since August of last year. So it's given a close at 4,500. So definitely infra stocks are also going to see some corrections happening. If you look at the energy index has broken this major support, which was 25,250, which it was holding on for the last 4 weeks. And if crude oil prices continue crashing, then I'm guessing we're going to see some sell-off coming in the energy sector as well. So keep a close watch on the energy sector. Be cautious. It might be a good time to maybe book some profit over there. If you look at the FMCG sector, FMCG is still holding on, not seeing very big correction. Last week everything corrected, but there are still some pockets in FMCG like Dabur, etc., which are holding on to the levels. And FMCG is a safe sector, right? Because no matter what happens, no matter if a recession comes or a COVID crisis or anything comes, FMCG stocks or FMCG companies will still continue to operate and still continue to sell their things. So FMCG might be a good sector from a wealth preservation perspective, where you can get out of more volatile stocks and get into something slow and steady like the FMCG sector. If you look at Nifty Consumption, this is also looking weak. So consumption stocks are also not going to do well. IT sector is possibly the weakest sector right now in the market. I think it is the reason why the market started correcting in the first place, because IT stocks had shot up from the level of 17,000 all the way to 38,000 with no major growth in revenues, etc. So IT index is going to continue correcting, I believe, all the way down to 24,000. So you should avoid major IT stocks right now. If we look at the Nifty Public Sector Index, which is Nifty PSC, this has also given a closing below this major support level. It's currently closed at 3,749. Let's see if it holds on to this. There is a support still available here, not too far away, at at close to 3,500. Maybe you might see some support here, but overall picture not looking good over here as well. Pretty big red candle at the support level. If you look at Bank Nifty looking okay, still holding on to its major support, which is here 30,237. It's not broken its major support zone yet. It's also staying above 32,000. So Bank Nifty looking stronger, definitely stronger than a lot of other sectoral indices. So maybe if it comes to the bottom of this channel or somewhere here, you can do some long-term investment buying in banks like Kotak Mahindra, HDFC Bank, etc. But for now, the banking sector looks a lot more stable than the other sectors here. Coming to the small cap index, where most of us are invested in, this is not looking good at all. Small cap index has already corrected by, let's see how much. Yeah, it's corrected by 31%. So not a pretty sight. It's broken the major support at 8,500. And I think now the only support left is one. There is a short-term support here at 7,880. If this is taken out, then I don't know how deeper the correction will go, but hopefully small cap indices hold on to this level. But this is the next major level we have to keep a watch on. Definitely small cap stocks are looking weak. This was a good opportunity that the market gave to exit our positions here. It gave 4 weeks. Out of that, 2 weeks were bullish weeks where you could have lightened your positions if you hadn't already. But now it's definitely looking very bearish right now on the small cap side. Mid cap still not doing as bad as small caps. It has broken its major support level at 26,890, and now the next support does come in at, let's see, the next major level for mid caps is 22,738. And if we look at how much it's corrected by already from its all-time high, then it's corrected by 22%. So definitely less correction than the small cap index. If you look at the Indiavix did shoot up a lot last week, but still it did not give a close above 25, which is a good sign. So Indian market still pretty stable compared to US, but very volatile definitely. I would prefer the VIX be under 20 at any given point of time, but right now we are still in a very volatile environment. If you look at the broader market, then the broader picture is also not looking good. Broadly, we have broken a major support level at 13,300. Very big red candle here, as we can see. Broader market corrected by 5.8%. Next support level comes in at 12,682, and if that is also taken out, then the next support comes in at 12,000 levels. Now let's go to Nifty and see what we can see in the major index of our economy. So Nifty has broken a major level of 15,330. Not a great sign. We gave a closing at 15,293 to be exact. This was a level that we have marked on our chart since many weeks now, and this has been taken out. Now the next support that I can directly see comes in at 14,300 to 14,000. This is a 300 point range which the market needs to hold on to for the long term trend of the bull market to continue. So if we see, do I think Nifty will come down to this level? I believe it will. I believe over the next 2-3 months max we will see this level come, and I think at that point we should see the correction get over. Maybe we might not see this level come in next week itself. I think market might consolidate here if the crude oil prices stay low. If the crude oil goes up to $100, then maybe the market might consolidate next week or the next to next week as well. At this level, maybe give a slight pullback, maybe try and retest the top of this bearish candle here. But definitely, in my opinion, we can see this level reaching once over here, because if the buyers wanted to hold this level, they wouldn't have let the index close below this. But buyers have already defended this level twice, right? So the first time the market corrected and it came up till here, the buyers defended this level, took it up, then came over here. The second time the buyers defended, not to the extent as they defended here, but they definitely tried to defend this level and took it up again. Now I believe the buyers are looking for a better buying opportunity, right? Because if someone already has money, if they are putting 20% of the money here, and then again they put a 20% money here, and now again you ask them to buy at the same level, they are not going to buy. They are going to wait for the market to go down even further, where they can also down average their investments. So I believe now that the market might come here, and this is the major level where we'll see a large chunk of buying happening from retail investors, from institutions, etc., everywhere, where they are also waiting for a good opportunity to enter into the market for long-term investments. This is a zone where long-term investors should definitely pump in some money, not all of it. It's very possible that this level could also be taken out on the downside, but if you have funds, then you should definitely put money over here in mutual funds or in big monopoly companies like HDFC or Hindustan Unilever, etc. So in summary, good news, crude oil is low. Bad news, the US dollar still very strong. USD INR still also very strong. INR is getting weaker against the US dollar, so that's not good. Major indices in the US have closed below their major support levels, not good. Major global indices in other Asian countries are very close to breaking their support. The same thing in Germany as well. In all our sectoral indices, there was a massive sell-off last week. The only sector which is still holding on to good levels is the auto sector, and overall the picture is not looking good. And let's look at one last thing as well, which is Bitcoin. If you look at Bitcoin as well, then Bitcoin is also not looking really pretty at all. So a couple of months back, I had drawn this head and shoulder pattern right here on Bitcoin. If I switch this to line chart, you will see that this is the left shoulder, this is the head, and this is the small right shoulder that formed here. We saw a breakdown happen, and this was the target that I had marked in my chart of 17,294. If we see here, the Bitcoin has corrected till 17,933. So technically, Bitcoin has achieved its target. Now, value wise, will it continue to fall down further? I'm not sure, but this level which it's currently at right now, if I switch to the monthly chart, then this is a major resistance back in 2017 where it's currently trading at. And if we follow pure technical analysis, then we know that major resistance zones become support zones later on. So now let's see if the Bitcoin index holds this level or no. If anyone is looking to invest in Bitcoin, now would probably be a good time to deploy some funds if you are a Bitcoin or a crypto investor, because cryptos have corrected massively from the top. If you look at the total correction, then crypto has corrected by 71%. So definitely a good dip for people to take advantage of if you believe in the crypto story. So none of this was meant to scare anyone or give any buying or selling advice. This is just my analysis that I'm sharing here. Please do your own due diligence before making any investment decisions. And hopefully you enjoyed this video and you got something to learn from it. Thank you for watching. Goodbye.